Hey there, thanks for stopping by the channel. My name is Sean and this is Reverse TV. Today I will be discussing reverse mortgage explained simply. Don't forget to like, subscribe, and comment. And if you want to get your hands on a free reverse mortgage info kit, the info to connect is down below in the description. With that said, let's dive in. In essence, a reverse mortgage is a very safe government insured loan, and it works just like a regular home mortgage, except for there's three tiny key differences. Number one is the point of entry is age 62. You can't do a reverse mortgage until you're either 62 or older. However, there are some states that allow for a program for 60 and 61-year-olds, but with COVID-19 going on right now, that program is on hold. I'm thinking that it'll be available again soon, but officially it's still on hold. Difference number two is that there's an equity requirement. The older you are, the more you can borrow. So the equity requirement is you need about 25 to 50% equity. So a 62-year-old is going to be able to borrow somewhere around 50% or maybe a little bit more of the value of their home. And then someone, at age 90 will be able to borrow as much as 75%. And it just moves up on a sliding scale with every passing year, going from about 50% on up to 75% that you can borrow. Now, the third difference is what sets a reverse mortgage apart from other home loans. And it's just the way you pay it back. There's no payment required to the bank when you do a reverse mortgage for as long as you live or for as long as you live in your home. That said, really all it does is it changes how you pay it back. It gives you freedom to either make a payment every month, make an interest-only payment every month, or pay it for 10 months and then Christmas comes and you take a payment holiday so that you can buy Christmas presents without, living from paycheck to paycheck. You can make a payment every other month. You can do whatever you want. The whole thing is that you don't have to make a monthly payment for as long as you live or for as long as you live in your home. If you were to do that with a regular loan, obviously the bank will begin foreclosure proceedings and so on and so forth. You don't have to worry about that with a reverse mortgage. Granted, you do have to pay taxes, property taxes that is, and you do have to maintain insurance, just like a regular loan and just like if you owned your house free and clear, frankly. So that's it. It's really just a regular home loan. It has three tiny key differences compared to that regular home loan. The best part about it is that you don't have to make a monthly payment, and that's why so many people have flocked to this program over the years. Over 1 million people have actually done the FHA insured reverse mortgage. Again, if you want to get reverse mortgage information, check the description down below, reach out, connect. I'd love to hear from you. Cheers.